Well, Devin, it's good to run into you again. You right? Ran into a coffee shop the other day, and here
Yeah.
we are. I think we first met in the WeWork in Seattle when I was looking for folks to kind of help me expand my brand. So what have you been up to since? And sounds like a lot has changed. You've got through a lot.
Yeah.
So
Yeah. Well, before we got on topic here, we were talking about how these things start for people. And I can't highlight how many times it's not just started, it's started again and again and
uh
again. Just like a lot of things in life, you have to kickstart. So from when we met, like
yeah,
that was holy cow.
that was a while back.
2008, 2009.
9, yeah,
Yeah, so I mean
that's
that's
a
a
while.
while back, man. And at that time, we were a full-fledged web design company,
Hmm.
which at that time was a big deal with e-commerce exploding.
Yeah,
And at the same time, social media was going crazy as well. And so we got really tugged into the social analytics
hmm,
arena because people wanted to know who was on their websites, who was liking their stuff. So that's when we met.
yeah,
Is like there was a lot about how to promote your brands, and now it's just everywhere. It's
right.
like too much. We had stepped out of that actually because of blockchain. It wasn't
Hmm.
even because of Bitcoin. That we were
So,
talking.
so how did you find out about blockchain in
That's
that
the
early?
2013.
Yeah,
Man, I got referred from a friend to just check it out. I
mm.
bought one for $96 and
One
never thought
Bitcoin.
one
Yeah.
Bitcoin. Never thought about it again until 2016, maybe even 2017. No, 2016, mid
Hmm.
2016, when a buddy of mine had come to me and said, "Look, I have these websites telling people that they can help people trade," and it's like that sounds like a scam. This is 2017.
Uh huh.
Everybody doesn't know what to do with this Bitcoin thing.
Right.
Really, they're just hoarding it up. And so we just put out a simple trade engine that didn't request people to send any of their Bitcoin anywhere. They just connected
Mm-hmm.
to their API keys, whether it was Bittrex or Binance or
Mm-hmm.
Coinbase. And when they made more of the asset, meaning it didn't just go up in value, Bitcoin didn't just go up, but they
Mm-hmm.
actually saw on their own account that they have accumulated more Bitcoin. They donated. We couldn't even enforce a
Right.
payment. So it was one of those things that was like, sure, I'll do that for you.
Right.
And then 3 months later, we had accumulated millions of dollars in people connected to our trade engine because they knew they didn't have to give us their Bitcoins. There was a safety
So
mechanism.
it's just like a tracking,
No, so it
like a
made the calls.
dashboard.
No, it was a high frequency microfractional trade engine. We
Mm-hmm.
could trade hundreds of trades per second without causing an issue per the person's account. Many of the trade engines out there, or I would say more just trading bots at that time, caused a lot of security issues that would
Mm.
flag people's accounts and then get them shut down, even though they weren't doing anything they shouldn't, besides just trying to use something to help them in a
Yeah.
market they didn't understand. They're just like, I have no clue what I'm doing here. And so to me, they already had this stuff. And I think I need to backtrack a little bit actually.
Yeah, because
to
I was going to
explain
ask,
how it got
what's a trade engine for the layman, right?
even just step further back.
Yeah.
How did I get pulled into blockchain and all of this really? It started when the social media craze got exposed to the crypto craze, aka Bitcoin at that time. And I was just trading little stocks here and there
Right.
with social sentiment. And it worked. It was good. It was an indicator nobody really had. The stock market people didn't think about it.
Pre-game GameStop.
Yeah. Yeah. Oh, way before that. Way before that. Social sentiment is a big deal, but the problem is the average person's barrier to entry was $25,000 to get into stocks at that time.
Right.
So unless you had 25 grand, it doesn't matter what you said about the stock, they weren't going to influence anything.
Yeah.
But all of a sudden, we started seeing this with Bitcoin. And I was like, what if we apply social sentiment to Bitcoin?
Uh-huh.
And it went insane. Like that's within 3 months, we went from zero to over $7 million in people connected and growing their accounts in a way that was like different than the rest of the market.
Mm-hmm.
Everybody wanted your crypto assets. And we're like, please keep that away from us. We don't want your asset. If you're happy with the service, go ahead and donate. If you don't donate, though, we can't maintain the service. So there was this unsaid trust of like, look, you're trusting our engine to trade and to accumulate more for you. And here was the deal too. When people didn't have more than they previously had, high water mark, it just kept trading. That was it until it did. And it just kept you safe, as safe as possible. And that was the agreement. But at the same time, we had no ability to withdraw people's funds, which was so crucial right now, because either you're sending your crypto. Remember, this is 2017. So now this all sounds crazy. Like, why would you ever do that? People didn't have options back then. They either had
they didn't have Coinbase or any of that.
They had Coinbase, but the ability to maneuver was all manual. And when it was all either in your control or in somebody else's. And that's typical in the stock market.
So like when you had a USB stick, or what are we talking?
Dude, it could have been a USB stick that somebody flew out to purchase, and then you end up moving the Bitcoin. But we never did any of that stuff. That was the stuff we were fighting against. So what ends up happening is the state of Texas actually saw what we were doing. They just saw blockchain. They saw Bitcoin.
Right.
They didn't take a second to hesitate and immediately issued a cease and desist to us that got blown up between the state of Washington and the Texas Securities Board. And
what was that like, going through that?
Oh my God, dude. It was not the best.
Yeah.
But at the same time, I learned things that you can only go through in two ways. You either go to law school, or you get chased by people who went to law school.
Right.
And in the end, though, the upshot is pretty ironic. I think that's what we were talking about when we met. This exposure, and through the understanding of what we were actually trying to do, they dropped the charges. Nothing came of it. I am now friends with the prosecuting attorney.
There you go.
That initially was like, hey, but then when they found out we weren't managing people's assets, we weren't holding their assets, we were actually fighting against that whole thing going on in the system. And I do agree with regulation. Even with all of that occurred, regulation allows safer markets so that the majority of people can flourish. That's the point. Right. So for me, it was not fun, but it was very eye-opening to things like, I don't agree with people when they say Gary Gensler's a bad guy.
Yeah.
I think that their job, the SEC's job, is to enforce. It's not to be your attorney. It's not to explain to you the law. And it's definitely not to protect you. It's to protect the body, the large organism. So had I not gone through this experience, and now I have spoken in DC, I've spoken on committees for senators in Congress, they have come to us and flown out my co-founder and myself to DC to tell them, like, hey, what is going on? How does this stuff work? And are these laws applicable to the technologies? Because what ended up happening is they just came after our company because they saw blockchain, Bitcoin, cease and desist.
And they were kind of going through everybody, right? Not just you.
Oh no, it was everybody.
Yeah.
And the worst part about that situation, I think, was the exposure of my personal information. So when the SEC or the FTC put something out to protect the public, they make known who you are. They tell everybody who you are, what your potential net worth is, what you're not doing, what you are doing, if you're a good dad or not, even though they don't know that. So what ends up happening is everything about my life is open to the public. And then there's these websites that sell your information.
Yeah.
Things like your past addresses, family members, everything. And so somebody out there combined those two things and stole a lot of value from me.
Wow.
And at the same time, they stole something even more important, my reputation. I had built up a reputation of helping people, doing well by them. And that was something I worked hard for. And it can be gone in a day if you don't make the right decision sometimes. And so for me, coming out with a destroyed reputation was the biggest loss. And
that's something that money can't replace right away.
No, sometimes it can never replace it. If, whatever is associated to you, I mean, essentially Google is what tells people who you are, not you, not your lifetime of experiences, Google.
Or any changes that happen.
Yeah.
Right?
Yeah. So there's multiple things in the situation where I went from, over the last decade, web design, social analytics, trading, really just social sentiment within the trading. So it just carried that
Mhm.
over. And then the market shifted. It went from this really closed off threshold to we had Robinhood all of a
Yeah.
sudden. So everybody could get into trading.
Coinbase is more prominent.
Coinbase is more prominent. Fidelity opens up personal application.
Hmm.
So all of this has changed in the last decade where, what I was trying to do at the time was considered, at first view, oh, you shouldn't do that. But it's exactly what they're asking for now.
Right.
It's everything. They're like, oh, man, maybe people should be in control of their assets and there shouldn't be platforms that are centralized holding all this valuable information. Um, I mean, we don't all leave our passport at the airport. We don't all leave
Yeah.
our driver's license at the DMV.
No, it's with you.
Yeah, exactly.
Yeah.
And that's what happened here is 2008's response. And I'm going to say something maybe a little bit confrontational, but I believe Satoshi Nakamoto got it wrong.
Mhm.
And it's as simple as application being done wrong. For instance, you can put a Band-Aid on wrong. Doesn't mean the Band-Aid's broken. In 2008, when the collapse happened across the world, Satoshi Nakamoto, I guarantee, is part of the 94% of people that do not have access to a modern credit system, meaning credit report with Experian, TransUnion, Equifax, Shufa, some of those out there. That means that the exposure or understanding of that market's probably not clear. But in 2008, there's this big push to change the status quo, and out popped Bitcoin.
Right.
Bitcoin was supposedly going to fix gold and value transfer. And I agree with that. But what it actually got turned into is a payment system and not a store of value. So then all of a sudden we went down this long track. But if we think about what blockchain is, blockchain is what's the first thing you heard of blockchain was?
For me, it's the like, quite frankly, I'm still learning. It's these blocks, and then everybody owns a piece of some form of information that helps it become secure. And then when you send, let's say, a piece of paper, like a paper that you wrote, and then you have multiple people that can vouch for that paper. That's my understanding.
So let's dig into two different things to think about. The blockchain's purpose is to validate information and ensure that hasn't been manipulated. It does that by linking blocks of information that have not been tampered with. So you can prove that by using a block explorer and looking and making sure that that block is set on the chain. But in the most basic fundamental, like this is a water bottle, that's a cup, right?
Yeah.
A blockchain is a digital ledger. Okay. Can we agree on that? It's a digital ledger. So a ledger has a definition. It's a tracking of historical debts. Those debts can be monetary. They can also be like quite unique or custom. You're ledgering the debt. Maybe you owe me, 400 flamingos and I owe you, 1,000 coconuts.
Yeah.
It doesn't have to be actual money. And so when we take blockchain and its literal meaning, digital ledger, tracking historical debts, what does that sound like in modern day?
That sounds like credit.
Sounds like a credit report, right?
Yeah, credit report. Yeah.
So that is where I wager to say that the 2008 crash, we all know, wasn't because of the fault of currency. Yeah, there's a lot of fake stuff out there, but it was the crash of credit because we didn't have reputation that clearly established people's ownership and their risk and liabilities. And so blockchain was supposed to be the first application of credit, not of stores of value. And then once we had a credit system, credit report, you can claim that's my Bitcoin over there. That's my Ethereum over there. That's my NFT over there. That's my data over there. It's being able to point with immutability your control and ownership. You don't have to I'm not going to walk around with petabytes of information, like my genome sequence.
Yeah.
And funny enough, we had a conversation today with a company who is doing exactly that. And their problem is they're like, guys, we have petabytes per person, right? And so
much data.
How do you link that? Well, you can't just put it and say, here's all your information. You now are in control of it. Like, you have to still maintain services that are the actual service providers that store that information, but have an immutable ledger that says that is my information and I have control of that and rights over that. And that's what's missing right now. And we're finding that in the blockchain space, that really is the missing component. There's a diagram that EY put out.
Right.
And it shows, can we pull it up here?
Yeah.
It
What's
would
it,
be
what's it
EY
called?
diagram, ledger, impact, maturity. Well, I have it here on my phone too, which is crazy. So you can see it right here. You see what I'm talking about in the diagram? So down below, it shows those overlapping each other, right? And if you look to the left, do you see the bubble that says big data and analytics and how it's not connected to the distributed ledger bubble, but everything else is?
Yep.
And if you zoom in on that thing, it says credit and analytics. And I'm over here like, guys, hey, if we just use blockchain as a ledger, just start there.
Just start with the basic, right?
Brings all of this together.
Yeah.
Everything. Stable coins make more sense now because I could settle my credit debts in the stable coins I own. Because that's what credit is for. It's to build those secondary markets, right? Insurance, stocks, those don't exist if we don't use bonds and credit. Right. And so it is a civil duty to use credit because it helps everybody around us. It makes all of our lives easier.
Yeah.
So the education too, we're working with some amazing people to build out financial education that is not your average. That's, a lot of the time we're taught to save.
You're right.
But the reality is 67% of our...
what and save where?
Yeah. Well, and even then, should we be saving first as an efficient, responsible way to build the economy? Because here's what I wager. What is the economy for?
Backing up, right? What you're talking about is your new company, Fresh Credit.
Yes.
Right.
Yes. So backing up a little bit is after going through all of the previous stuff, social analytics, web design, and then crypto, and then really settling into the blockchain space, and then having my identity stolen, that was the perfect storm for me to go, hey, this blockchain thing, I really love Bitcoin. It makes sense, but I feel like we're missing the mark here. By the way, my identity just got stolen and all of my data is destroyed.
Your whole life is upside down.
And I'm just sitting in the pothole that I tripped in. It's not even a thing of like, I created something amazing. I just looked around and said, if I had blockchain technology to hold my credit report, I could hold my report, not have to go get it from some other company that's constantly getting attacked and hacked. Here's a mathematical fact. There's more likelihood of you getting your identity stolen by far if it sits in some central company than if you're holding it. One-on-one hacks are just not even comparable to systemic infrastructure hack. Like everybody here is getting served, right? And that's the problem, is that the solutions that are available to the public now were great in small communities. But as you expand them outward, we need to look towards solutions that provide privacy and security as well as transparency and equal balance, because we need to regulate the markets. We need to know they're safe. It's like people can't be like, oh man, just close your eyes while we swim on the beaches of Australia.
Right.
Like, no, you should probably have helicopters looking for sharks.
Right.
So we're not trying to get rid of the Gary Genslers. We're actually trying to help them, and we're trying to help us. We're trying to help everybody in between, because just like that diagram.
So how does that replace the three big firms that control the market?
Awesome that you asked that. So we first and foremost filed patents for the technology itself, but we didn't file them in a fashion that is oligarch or monopolistic or trying to take over the industry. We filed what is considered a standardized patent, meaning we are open to collaborate. And we've actually been talking to some of the representatives, large executives over there that are interested in us being a data aggregator for them, for data that they are not able to access or the law forbids them to have and hold.
But they have all the data.
Right? Yeah, they have a lot of data. When they get asked where they get it, they're like, oh.
They can't access it, but they have it.
Well, and so we found that we're not at all at odds with the current system. We're actually trying to bring, and there's a lot of room, okay? 94% of the population is not part of the largest market in the world. There's so much room to grow, and credit is what feeds every other idea. So it's not exciting. It's not, time travel or quantum computing or AI. Well, we do use AI in some components, but at its core, this is as simple as planting a seed or lifting the bar the first time at his workout. Like, you have to start somewhere. Credit enables innovation. Innovation will not succeed without credit because it
Mhm.
it can't do one-off payments or, a few time finance. It needs real financing. Why we
So
see it here.
so I think I'm seeing and correct me if this is just the wrong view. Like, let's say you have a Japanese guy or a new citizen coming going to different parts of the world, and they want to go buy assets over there.
Yeah.
You're saying that your program can help that overseas company or an American company analyze a foreign national on whether they're bankable or not.
Yes, and async. So the reality is everybody has ownership of something in this world, even in
Yeah.
all the other countries, right?
Mm-hmm.
There is millions of immigrants that come into this country that have homes, have cars, have other assets,
Mm-hmm.
and none of that counts. They got to start from ground zero.
Yeah, I
Like they're an
mean, their degrees don't count.
It's insane. And so yeah, that's probably the most common story we hear is the internal problem, but that is also an indicator of the external problem, which is like, oh, if none of you guys are compatible or integratable when you come here, what does that say about the rest of the system around the world? And so I was naive. I thought everybody in the world had credit systems. I thought everybody in the world had their own form of credit. It wasn't until my identity got destroyed and I started looking up our own credit system and understanding, like, holy cow, 1 in 3 reports has an error big enough to affect your credit in a way that you could not get a loan. If you were to go any other restaurant, like a restaurant, and they got your order 30%, 36% of the time wrong, would you ever go back? Like, hey, no. And then you dig deeper and you look at CFPB filed complaints. 96% of all complaints filed within the financial industry are about the 3 credit bureaus.
Wow.
That's every other bank and institution in the other 4%. Okay, so there's something really wrong with this system. And then you dig into what those complaints are. It's inaccuracies on reports. And then you figure out, well, why is the report so inaccurate? I thought it was supposed to be safe and secure. Well, originally it was racism, redlining, bias. That was problems we struggled through early 1800s to the mid 1950s. When FICO finally came around in 1856, it really evened out a lot of those problems. I'm not saying they don't exist, but that was the main fuel behind inaccuracies in reports before. It was just pure human hatred.
Wow.
A lot of time, and mistakes. People just being like airheaded, writing down the wrong thing. But now that's not the case. We have technology that makes fields impossible to edit, so people can't change things. It double checks, auto corrects, does everything, and verifies. So why is this such a problem still? Well, it's exactly what happened to me. Identity theft. When somebody steals your identity and applies for loans, they apply for different things, they use your information, it becomes an echo chamber to all the other data furnishers as well as the main bureaus. So there's about 42 actual consumer databases that are federally regulated and ran.
Wow.
Experian, TransUnion, Equifax are only 3 of them. Okay. So of those 40, then there's about 275 plus data furnishers in the US that are constantly changing their business models, shifting states they're in, all because what they do is pretty shady. They scrape your data and they resell it. And the thing is, their biggest clients are, who do you think? The guys that don't want to tell you where they got that data that verifies that you don't know what you're talking about. So what ends up happening is you go and dispute something with the major bureaus. They go and ask all these other data furnishers, hey, is this information correct? Well, wait, now you're just in an echo chamber telling each other you're all correct. And how do I, as an individual, go out and correct hundreds of inaccuracies so that I can then correct the main inaccuracies that are messing my life up?
Yep.
Okay. There's a lot of things I learned afterwards that, I as a human thought maybe I'm just kind of weak up here and this isn't that big of a deal. And people go through all this all the time. 1/3 of credit reports are wrong. But then you start to look at the studies supporting like just how bad this is for the human psyche, mentally, physically.
Yeah, because it affects your life.
It changes everything in your life and it affects you physically. There was a study, you can look this up probably again just to make sure we're all on the same page. But said the equivalent of losing a job that pays you $100,000 is the equivalent of 25% of experiencing a spouse die. Okay.
Wow.
So losing credibility that gives you access to, I don't know, a home that's
Yeah.
$200,000, $300,000.
Yeah.
Just start to correlate that to the things. I was unable to get a car. I was unable to get a home, like
Wow.
rent a place.
So how did you go through that process and dig out? Like
Oh, man.
what did you go through mentally, and what did you tell yourself? Like, you know what, I'm not gonna give up.
Yeah.
Right.
It was that catch-22 of that situation. So many people are going through this that it felt like maybe I do nothing, which is what a lot of people end up doing. They just stop.
Yeah.
And then there was that thing of like, there's so many people here. I have to continue to, there's gotta be a way out. There just has to be a way out.
Yeah.
And so it took a lot of research, but first and foremost, it took coming to terms with like, it's easy fault and responsibility to be like, well, it's not my fault, so it's not my responsibility. But the reality is it's always your responsibility if you got to take care of something.
Yeah.
No matter whose fault it is. I didn't opt into Experian, TransUnion, Equifax. I didn't opt into these data furnishers. They were the first freemium, freemium accounts.
Yeah.
And when they get hacked and their data is stolen, why is it my responsibility to clean this up? I didn't even opt into this, but it is still my responsibility. And that's what we're trying to change at Fresh Credit. Like giving you the ability to hold your own credit report gives you a lot more responsibility on that, right? And you have a lot more understanding of what it takes to protect your information, what you should be protecting. And at the end of the day, too, we don't want to make it complicated. And so it makes it easy for people to opt in their information and say, like, look, as long as I'm sharing this with me and not somebody else, that's a good start. So I had to go try to write all of these disputes away. I'm just jumped into what happened and how I got out of this. I had to write the disputes away. You go in and it is a complicated system, and it takes months, if not years. It took me 18 months to go from a 480, which my credit was, I went from a 750 to a 480 to an 811. But it took me 18 months. So my identity gets stolen, tanked to the 480. And I start looking everywhere for solutions. There's nothing. There's literally no options. And outside of this United States, they're like, what's a credit?
Yeah.
So what ends up happening is I'm trying to manually write the bureaus and say, and they're telling me, well, it's verified over here with this other data furnisher. You can look them up, Spokio, been verified. And so I'm like, who are these guys? I didn't invite these guys to the party either. And so I got to go and I write them. I tell them, you can't have my information. And I'm sitting here looking, do I have to do this every single month? Because every single month, this cycle starts over. Anytime you sign
somebody's buying Intel.
Yep.
Yeah.
You buy something and they say, hey, we're going to use your information.
Yeah.
That's part of it. So you just keep restarting.
Which is everywhere now.
everywhere. So there's that problem, is that you keep giving permission. So there's this ongoing process of giving permission, but how do I rescind permission now?
Yeah.
And then on top of that, the manual process was just impossible. When you have hundreds of different companies and they get to restart, and then if they they also move around a lot, like we were talking about, because of this. There's different state laws. In some states, they only need 30 days. Other states, it's 180. Some states, it's 90. So they'll move around based on if they're getting sued, in trouble, and then they just keep selling this information to the bureaus and to marketing companies and to anybody who wants your information. Like, you could go buy people's information. Not saying you're a bad guy, but anybody can buy this. And this is insane because it's the same information that you use to verify to get into secure platforms like Experian, Equifax. Like, what's your past address? What's your mom's maiden name?
Yeah.
Is this your old phone number? It's all up for sale legally. So we're not going to change that. Changing federal law takes a lot of time. They are in the process of doing that. But Fresh Credit leans into the current policy and the upstream policy by giving people for the first time ever that I know of, an option to hold their own report. And that's in thousands of years. There's never been the capability for you to hold your own.
And do companies accept it?
Yeah. Well, and that's the cool part about, so federal law mandates, and they're actually asking for other companies to be involved in alternative scoring, alternative reporting, alternative data, because they themselves can't be involved because they regulate the market.
Yeah.
So they issued, the SEC bond market committee. I think it was in 2001, so it was a while back. But
Mhm.
they issued a statement essentially saying exactly that. Like, hey, look, we can't like make the scoring system and regulate the market. Otherwise, everybody quits because
Mhm.
that's a totally fixed game.
Yeah.
And that would upset global markets. So we're stuck to accepting the public's help, which is a great thing to be stuck on, to run a publicly beneficial tool,
Mhm.
right? And that's what we're starting to see with the rise of blockchain. It's enabling organizations that aren't necessarily ran by one institution or one group, but the public's interest, which is important.
And giving people their power back,
Yeah.
so to speak, right?
Yeah. Well, and it's not even giving them it back to them. It's giving it to them the first time. They've
Yeah.
never had
They've
the
never
tools
had it.
to do this themselves. Like, hey, I'm going to aggregate my own data.
Yeah.
And what ends up happening is we give the person the ability to store their report right on their own device, right? So, but they can't manipulate that data because what's stored on chain is a hash validating the current state of that report,
Mhm.
not the actual data, because that would be insane. When we talk about quantum computing, anybody that tells you they're going to encrypt stuff and put it on blockchain or a blockchain, and we'll get to that in a second. Can't stand when people say the blockchain because it's like saying the software.
The
Like,
software.
what do you mean the blockchain?
Yeah.
There's this ethereal blockchain.
It's like the AI.
Yes, the AI. So what ends up happening is if you plan though to store data on chain, it better never be sensitive data. And the idea that you can encrypt it and it'll be okay.
Mhm.
Quantum computing, the US government and governments around the world have already put out statements to their technological communities saying,
Mhm.
look, you need to figure out quantum resistant technologies. You need to figure out how to build them. And that doesn't mean we build higher fences or bigger
Mhm.
walls. It means you remove the incentives a lot of the time. So for us, quantum resistant means we don't store data on chain. It doesn't matter what, you know, what level of artificial intelligence or
Mhm.
decryption you use, you're stealing receipts and that's going to do nothing for you. But those receipts mean everything as to the private parties that
Yeah.
are looking and verifying if the report is in fact correct and accurate. And so enabling a person to walk into a dealership or a bank anywhere in the world
Mhm.
and validate a level of reputation that's acceptable without violating their privacy rights, because
Mhm.
everybody does have them. Whether they legally have them or not, you have
Yeah.
an innate human right to privacy.
Yeah.
So yeah, that seems so basic and primitive to me to use blockchain, but it took me 7 years before I realized that. Remember,
Yeah.
2013 to like 2020. Well, yeah, because 2019 was the end of the whole SEC,
Mhm.
FTC debacle. That chapter closed up,
Mhm.
and I began fresh credit. And so we're here now. What is it,
Yeah.
2024, almost 2025?
Yeah.
And it's that whole story that I just talked about,
Right.
though, that brought the people together that I never dreamed of.
And it was a personal experience that
Yeah,
made it happen, right?
yeah, it was insane.
So how now going back to, you dug out your credit, the credit problem, which created a new business. But how did you rebuild your reputation, right? Because
Yeah.
you're starting this new company, you're probably going to go out and raise money.
Yep.
Did you do a quick Google search?
Yep.
So walk us through that.
Man, I mean, that's the real life experience right now that's going on.
Yeah.
So,
And you have some good people on the board, right?
yeah, we have some, people from the White House, chief of staffs over there, chief of foreign service. We have people in policy here, Mayor of Bellevue. They're all in personal capacity, though. They're not in the company as, the mayor or anything like that. But the fact is, I never would have had the opportunity to work with these individuals had they not heard about the problem I went through.
Mm-hmm.
And at the same time, the manual intervention I had to implement to get my identity back in place. So,
identity and reputation.
Yes.
Right.
And it had to start with financial reputation first, because that's what enables you to be able to get access to the groups of people that then help you rebuild your I would say, community reputation and what people know you for.
Right.
So the irony is, just like my credit, I went from great credit, 750, to really bad, 480,
Yeah.
to above 800. And so in the same manner, they went from, a good group of people to no people,
Yeah.
to how the heck is this happening? Why are all these amazing people so interested in what we're doing? And at the same time, they're superseding what they're finding on Google because they hear what I'm talking about, which is the whole problem. Is if you can just Google somebody and that's how you decide who they are, then we're screwed.
Yeah.
There's nothing. We're stalemating the world. You are. I don't know what I can say on here or not, but you're economically cock blocking everything.
Yeah. You can say anything.
So, like, the reality is it took so many years of working with these individuals that, on a personal level, some of them it took 2.5 years of talking to, and just going over and over and over and meeting and hanging out in personal sessions to get to a point where we could say, look, I don't believe that thing, and we need to build this because it took that long to figure this out for us to move forward, because the world doesn't run on one person's decisions. It runs on relationships, and those relationships are ran on reputation, and that reputation is currently everything. And and we don't have tools to actually manage our own reputation. It seems so primitive, right?
Right.
Like, wait. When we talk about banking the unbanked or inclusive finance, none of that matters till people have a report that you can reference.
Yeah.
You can't have a bank that banks
like,
the unbanked.
is this guy a good guy? This girl a good guy?
Or are they the guy?
Yeah.
Are they the person that they say they are? And so there's a lot of identity solutions out there, right? A lot of tools that are focused on identity and why we're really different. And this is what I wholeheartedly believe, and I feel that most people have yet to refute it, is that if I give you an option between your passport and your library card, they're both your identity. They both prove your identity. Which one are you keeping?
Passport.
Okay, innately. And everybody knows that, because at the end of the day, what's the difference? Passport gives me access to finance. I know that I can use this to get
you
financial
out of the country.
assistance. But an identity can still do that. At certain levels, I can walk into, I'm certain, I can't guarantee it, but I'm certain a library card passes as identity in some countries.
Really?
I don't know, but I'm sure once you're in there, they would be like, oh, okay.
This is my Kate County library.
Yeah, right. But the reality is, it's about what's important to the individual is access to finance. That's a key relationship we have. So if this identity doesn't give me access, why do I want another identity? Like, cool, I've got a library card. Thank you very much.
Yeah.
So our identity, our structure, our hypothesis, our methodologies are all built around people being able to build their credit, their reputation, because that's what is the long-term goal. Like, for instance, Amazon and Facebook are offering you money every month to use your data. You can go sign up for that. It's not having a lot of success.
Yeah.
You know why? Because most people there go, it's not worth the hassle to get a one-time payment every single month. But if I know that this data is going to help influence a decision for me to get a home, get a car, get medical treatment, yeah, sure. And especially if I can hold that information myself and it's in my secure domain, that's the problem, that we're not even meeting that very small need. And I say need because everything else relies on it. Yet we're already trying to figure out all these other things to do. Look, we're strangling ourselves innovatively. We're strangling ourselves economically. And all we got to do is put a PDF out there for people to be like, that's my car.
Yeah.
Seems simple, right?
Right. Big shout out and a huge thank you to Zeakin for making this happen. They have an amazing platform. Check out their website, zeakin.com, zeacon.com.
Oh, I can go on and on forever, though. The rebuilding of reputation, it took a long time. And I would say even now, I still, with the team we have and the people behind it, why is it that my reputation still has this stigma where we are always addressing this, and I don't mind it. It's,
Mm.
at this point, my business is all over the web,
Yeah.
and even the
I mean,
business is not about actually
yeah.
me, is on the web. There's the meme that I'm sure everybody has seen. It said, "Hey, if you heard somebody talking shit about me, believe that, because I don't have time to argue." Like, that's it. It's like,
Right.
when you go out there, you should make sure that you're aligned in helping people,
Hmm.
and the technology makes sense. Those are the two things that are my North Star. And it sounds cliche and corny,
Hmm.
but it's also the reason that I've been able to get all these people to help, because it's very clear what we're doing
Yeah.
and why we're doing it. So I am not as prevalent or as important when, especially, I stepped down. That was one of the big things. We brought on some amazing people that made the recommendation that initially, and we want this to work. It's not about one
Hmm.
person being right. And it's certainly, the irony here is not about getting credit,
Yeah.
right? But it's about getting everybody the ability to access that basic tool, and that affects all of us, like literally affects
Hmm.
all of us. And even if you're not in it, your currency is affected by our credit system.
Yeah.
So we need to fix it. Ray Dalio, one of the greatest hedge fund
Mm.
managers of all time, said credit is the most important yet least understood market on the planet. Like, it's the most correlated asset,
Mm.
yet there are very few people that have access to it. We know that the real estate market and housing is a substantially, I would say, stable market
Hmm.
in comparison to many other assets, right? Like, the market itself has been a benefit for the majority of our existence, as credit as well, but we don't give it the same focus, the maniacal focus. Like, if people were to have financial literacy that is more about how to leverage their assets,
Hmm.
and not so much how to save their assets, because saving is good, but it's something that you do in the latter part of your life. And this is an opinion
Yeah.
of mine, right? Something you do for the latter part of your life. It's not something that you try to gain, grow, and break the certain patterns maybe that you want to break
Hmm.
in your life. You're certain. Now, if you're happy with what you're at, cool. Then just help the economy keep moving in the direction it should.
Right.
But if you're trying to break the patterns you're in, don't sacrifice people.
Yeah.
Like, that has never worked. I have survived all of the other problems that I've had because, for instance, when the SEC and the FTC thing happened, there was no single complaint from any person.
Hmm.
Nobody could complain about our
Right.
service. The reason we got it is because they saw an ad and
Yeah.
they saw blockchain Bitcoin.
Like,
That,
who's next?
that was it. So there wasn't even a complaint about the service. So when you do things that are in the form that serves the consumer, the user of your service or product, you're already in the right. You're already aligned,
Hmm.
because that's what they came there for. And being able to clearly articulate, we need credit. Credit tools do not exist.
Right.
What do we do?
Yeah.
That seems so straightforward for me. Sometimes I get, actually, almost a lot of the time, I feel it's boring for people to hear about this, but at the same time, it's everything.
Lots.
If you care about poverty, this fixes a lot of that problem. If you care about clean water, fixes a lot of that problem. You care about housing, this fixes a lot of those problems. That's why all these giant people are part of what we're doing, because they understand the implication, the impact that it makes in their focus of life.
Hmm.
Right? We have people from telco, from cloud, so Microsoft, Amazon, Google, White House. We have academics from Harvard and Northwestern and Princeton.
Hmm.
And so, individuals that far, far exceed my skill sets
Right.
in every way have said, you know what, this is important enough that
Yeah.
I'm willing to sacrifice my time and my energy for years for some of them.
Hmm.
And we had a pre-seed round. We didn't do anything after that. We have been able to work off purely sweat equity, millions and millions of dollars of sweat equity donated to the company and the organization.
That's awesome. Yeah.
It's unexpected too.
Yeah.
That we really want to see this come to life, and to the point that it's not just me pushing this,
Mhm.
but a group of individuals who have staked their reputations and their time. So, yeah, I am
Yeah.
grateful. And then again, they somehow seem weaved back into
Yeah.
us,
It's
right?
like so, we're just having coffee and.
Oh man.
No, thank you, man. That was great. Well,
So
so what's next for you? Just grow fresh credit and
yeah.
champion that.
Well, so part of this is an ever learning process,
Mhm.
right? So I've been in the tech space for a long time. I
Yep.
know that. And I was always on the outside, learning things, working for the FANG companies on freelance jobs, taking projects from the larger tech companies, but never internal.
Mhm.
And never had the time to round out my education. So the last 9 months, I've actually just got certified as a full stack engineer from MIT.
Oh, nice. Congratulations.
Thank you. Yeah, yeah. So now I can get my hands completely dirty, and I have the best mentors on the planet. Like, one of them is the ex corporate vice president of Microsoft cybersecurity
Oh
for
wow.
Azure.
Yeah.
So there's
That's
one, and then the other
yeah.
one's the partner director of engineering from Microsoft. Um, and again, they're in personal capacity helping Fresh Credit and mentoring myself. But I feel like I could champion the world with these people by my
Mhm.
side. I mean, decades of experience. I'm by
I mean,
all
that's
means,
that's practically you're getting a PhD.
yes, and we
Yeah.
have PhDs too.
Yeah.
So the ability to ask for advice and mentorship
Mhm.
from this group really makes it feel like,
Yeah.
what can't we accomplish? We have neuroscientists, we have economists, we have people who are PhDs just in education. Like, how do we teach
Mhm.
people? Like, just how do we teach people? And so that level of gratitude that this is important enough to someone who's never, I think a typical story in our group is that nobody really thought about credit this way. We all thought about our own
Yeah.
problems. And then we realized credit is tied to that problem. It's like, oh,
Credit's tied to a lot of problems.
tied to, I think,
Like once you
every
go
problem.
down, I mean, so imagine like in China they have the personal reputation score, which
Yeah.
is kind of like a global credit score, if you will, right?
Yeah.
And if you do one thing wrong, you're practically screwed in that country. So,
Yeah. Well, and that's the thing, is the credit systems that exist in other countries, they're not full-fledged credit systems. They don't give you a well-rounded perspective or 360 view of the person. They only tell you what they did wrong.
mhm.
And that's the same for Shufa in Europe. They only say like, hey, bad, 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 bad. It's like, what about all the good things? Like, let's get the
So how would you score somebody working to get out of where they're at?
well,
Like the person that starts off, like, let's say, as a janitor, but he wants to become a VP.
yeah.
And it's like, are they not counting the fact that he's going to school, he's doing all these things?
Yep. Yep. So the last time I checked, my academic record is not on my credit report. And frankly, I'm happy that it's
Yeah.
not, right? But
What'd you do before MIT?
well, what I meant by that is actually is that the less data they're holding about me,
the better.
the better, because if they get hacked, it's nothing malicious, it's
Yeah.
nothing mischievous of the company. It's like your likelihood of getting hacked is high. So the less information you have on me, the better.
Yeah.
But if it could be included, I would want it.
hmm
So that's where we
If
come.
it's going to help you.
Yes. So that's when we come back to the whole, like, well, if I'm the holder of that information, reducing it mathematically, making it
Mhm.
harder to penetrate and exploit a network, because you'd have to get every single person individually then. So we make it harder on that level and make it easier to aggregate. So you asked the question, how does somebody go from it was two different questions. First, it was kind of from bad to good,
Yeah.
and then the other was just from start to finish, right?
Mhm.
So a start to finish, janitor to VP, that is about reputation. That'll happen in life. As long
Yeah.
as you're a good person, you always hear those stories about somebody who took a non-traditional route,
Yeah.
right? So and then let me jump on the other one real quick and then I'll tie them together. The other one is when something bad happens and it's recorded, we need more context. always more context, and less
Mhm.
context never helps anybody. It doesn't
Yeah.
matter if you're a dictator,
Right.
a Democrat, liberal, like less context doesn't help.
Yeah.
So what we aim to do is not really try to solve those problems directly, but provide more data that provides more context around situations to make more personalized decisions, because we don't want to run or regulate the decision making process.
Yeah.
Just want to provide the information in a way that allows all parties to say, look, here's what you're asking for, and here's what we need. Though if those don't align, those individual parties never even know the other one exists. So
Yeah.
the recommendation engine, for instance, on a platform says, people, say you're a company and you say, hey, we want this set of information to make a decision. And we also want to make sure that this information doesn't exist or does exist. Well, they can set those personalized criteria,
Mhm.
right? And then the person on the other end say, you're just aggregating your data from your bank account, your Facebook, your Coinbase account.
Mhm.
And you're saying, well, I'm not really willing to share this information, this specific information. And if that doesn't align, then they would never even know you existed. It's like not getting an ad delivered to you
Right.
for things that you haven't liked or talked about.
Yeah.
At the same time, a user can say, hey, I want to share all my information to open me up to all the other opportunities. And this is where generative AI plays a huge role,
Mhm.
because really most of credit, if not all credit, is predictive. We were talking about that before
Yeah.
I came in. It's predictive. So the rise of generative AI wasn't super exciting for the finance industry because you can't
Yeah.
be creative.
Yeah.
But where it really changes things is recommending products and services that might help people get into a better position, like you were saying, or learn more about
Mhm.
their current state of economics that they can then leverage, right? And so, again, providing context to people. So this is
Yeah.
purely for us about the pipes and being able to feed context through data that has been validated, verified, and is trusted. Providers want to trust the data. They don't care if the data is good, or they do good or bad,
Mhm.
but they care more that it is real and accurate before good or bad, right? Like there's a
Right.
sequential
Yeah.
demand here, because if it's not real or accurate, you're like, it could be anything then. You
Yeah.
can say anything you want and I don't care.
Which is what the ninja loans were.
Yes, and which is what is all of the problems that we
Yeah.
have now, and from backing all the way to 2008 back to 19 it was 1910 when the only businesses I know of, and there's probably more, but in history I've never heard of the same company being burned down twice, and that was the credit bureaus for you.
Yeah.
Mercantile Exchange and Dun and Bradstreet,
Yeah.
same company, burned down twice because people were like, dude, this is the worst system ever, and it ruined my whole life.
Yeah.
But at the same time, it's the reason the U.S. has offset millennia of known economic standards, meaning the Middle East to Asia. We have grown in wealth faster and accumulated more wealth than any other known market, dynasty, anybody that we know of in history by implementing credit. And that's because it is risk averse allocation of value, right? So it's smart money. Like that seems pretty logical. Like
Yeah.
if we're not just throwing it out the window based on weight,
Right.
but it's like actually given to people who will cultivate it, which is
Yeah.
what we're saying is credit is not about spending luxuriously on big super yachts. It's about putting a lot more money than
Yeah.
super yachts into things that
Can help you grow, help something grow, help an organization
exactly.
grow.
Efficiency. And so that's the difference here is the real GDP, what people spend is the majority of the GDP. The financial GDP is the interest on top that all the billionaires have.
Mhm.
Like that's who we hear about. And you're
Yeah.
like, okay, I don't personally have this view of the big guys being the bad guys either.
Mhm.
Mainly because they hold all of our debt.
Yeah.
That's what's going on there. So like, quick, hold my beer times
Yeah.
trillions.
Yeah.
So it always makes me laugh kind of sympathetically, like, oh, poor you.
Yeah.
But they're crying in their giant yachts.
Yeah.
Yeah, man, it has been a journey. I never thought I'd have to learn about all this stuff.
Yeah.
I never even thought it was really that interesting. Um, and the eye-opening experience was that one person can actually make an impact so big in such a small amount of time. Like, and it's not just my own experience because I haven't done many great things in life yet.
Hmm.
But you look around and you see how quickly a good idea, a good concept, something that is built for the purpose of humanity
Hmm.
actually spreads. It's very hard to
Yeah.
keep back innovation that people love
Right.
and people find useful. And so that's my only goal is like if it's loved and useful, I
Yeah.
don't need to worry about all the other gimmicks and tricks and facades. Just delivered to people, and it's not the build and they will come. Like it's fulfill a need,
Yeah.
and they will stay.
Right.
Like that seems pretty basic, right? I'm not trying to put up lights to attract flies. I'm trying to like
solve a problem.
Yes, yeah.
Which is what, I think there's a popular Reddit, I don't know if it was Reddit or some chat group where somebody asked Elon Musk's ex on how to become a billionaire. And what she said was he was obsessive of solving people's problems.
Yeah.
Right.
I'm surprised that was a good response. I was expecting a sarcastic one. I just saw, dude, I don't know how that guy posts Elon Musk.
Yeah.
How he keeps up. Like, he's got to have a full-time assistant just cracking jokes.
Yeah.
like, otherwise, this guy is like, he's the equivalent of the guy flying the ship in all the movies, like in space, but is also like either cracked out on coffee or drunk,
right?
But still able to like warp speed everywhere. Yeah, he's an amazing person. And a lot of people have controversial views about him, and I don't agree with everything that he says. At the same time, it was one of his interviews that has stuck with me for like ever, and is efficiency. Lower input, higher output. That's it. Less resources in, more energy out.
Right.
If we can accomplish that, we are at a plus-sum game. We are winning. And so the way I see this is if we're putting less money into for instance, let's do an example here. When Experian or Equifax got hacked, it wasn't just the fact that they got hacked that was a problem. It was now all of the crime that also had to be addressed. It was also all of the insurance that had to be issued to solve the problems of the crime.
Yep.
And then it was all of the actual criminal investigation costs.
So like just a whole chain reaction.
And then repapering every single person. Giving them new social securities, new identities, new everything. And so...
And think about how much resources that consumed in other industries just for that.
But that's also money for those people. So how do you not steal from Peter to pay Paul in these situations? Essentially, how do you increase the pie for everybody? And that's what credit does. The irony in the situation is that credit is its own solution. Like the second we have it, you can now issue credit.
Yeah.
It's like you have a report. You can have a score. So you have a score, you have the ability to issue.
Yeah.
Or not, right? And so...
And then that person starts a business, or they go support the consumer economy. Yeah. All these things.
Well, and there was a popular cycle that shows the very clear difference between... So money is broken down into debit and credit, right? Debit being cash, what we settle our debts in. Credit being what we're supposed to use to purchase everything and everything else in life so that we get an accurate index of the value of that product. So the thing is, oh man, I lost what I was to say. But what did you just say 2 seconds ago?
It's the
credit,
cycle. Yeah, the cycle.
So credit, unlike cash, decreases crime. So when cash is distributed, crime goes up because there's cash available. So people have scams and they do things they shouldn't, because stealing cash and spending it is way easier. Credit, on the other hand, has an organic deterrence to bad actors because you have to fence everything to get the value back. And that creates more risk for them, creates just less money for them.
Yeah.
So it just makes more sense to go out and steal cash.
And you act differently knowing that you have to give something back.
Yes. And that gets into a different state of psychology. But if we were to talk about the exact steps that, like, if you go to work out, you work out right, you'll see results, right?
Yep.
That's it. Even if you don't eat right, you'll still see results. You'll get stronger. You might find your tone looks different. Might not get the results you want,
Right.
but you'll see results. And like so, issuing credit is mandatory to see the results. You can't just be like, I came to the gym, why isn't it working?
Right.
You have to actually extend credit.
Yeah.
And to extend credit, we have to do those prerequisites, have a report, get a score, and extend the credit. Otherwise, it's just like a communistic style consensus distribution of here's money, here's money, here's money. And that's necessary at times when we're going through problems like what happened with COVID. But to get to the very first point, credit and cash are not equal forms of money. One is definitively safer and feeds the economy. One is definitively more valuable, cash, because it actually represents the value to settle in, but it is way less safe. It's just way less safe. That's it. So when we distribute credit in society, crime goes down. We've seen this time and time again. When we distribute cash, crime goes up. But when crime goes down, what ends up happening is because people commit crimes under debt squeezes. They're doing it for money. Most people are not committing crimes because they love the crime.
Right.
So if we remove the debt squeeze by issuing credit, allowing people to pay their daily bills and the things that they need, well, then you increase community. And what I mean by increase community is you reduce the fear in society, and increasing community means people engage.
Yeah.
And the second you get people to engage, they start to observe each other and get new ideas. And this is how you get organic education. And then when people find their natural inclinations towards the education that they're interested in, because they're in a community of people they trust, because there's low crime, because we've distributed credit, see how this works?
Yeah.
All of a sudden, people want to innovate on the education they know. And once you have innovation, you can pay back the credit you initially took. And that's the full cycles. Credit and innovation relies on the community to gain trust, to build, lose the fear that it had, and then educate itself on what is currently happening, and then naturally innovate on that. And so this is why you see in societies that do not have credit rarely ever innovate, if at all. And this is also why America is so evil for taking all the innovation, but the reality is we're just able to finance everything.
I mean, we attract the people that want to come in and innovate.
Well, it's not even that they want to innovate, it's that they have to innovate and they have to be financed. They can't accept a one-time investment from some firm and say, okay, if you can't build it, you're done. It's like, no, I need something that leverages my reputation. Think about all of the venture capital. It's all based on, sure, your product and everything else,
but who are you?
Who are you? And so,
are you going to see this through, or are you going to steal my money?
Exactly. And that's the root of how important this is like, we can't even begin to innovate till we solve this problem.
Wow. No, this was very insightful.
It's insightful to me too, man, because I just think my way through it. I can tell
you're passionate about that.
I love it.
I mean, you bring up a lot of good points, right? And it's tough because you have to communicate that to the powers that be. And it's one thing to say, okay, yeah, this is a great idea. It's like, okay, now go implement it.
Yeah.
They're like, what do you mean implement?
Oh my gosh, the amount of stuff.
Yeah, I think that'd be another conversation.
Yeah. It really take what's in front of you, do it, and then the next thing.
Yeah.
Like, that's the only way that I can approach this, because there's so much going on. Especially not only just in the space, but for those who are interested in solving these problems, like, you get hit up on a daily basis on ideas and things you never would have thought of in the credit space, because it's correlated to everything else. The call this morning about the genome sequencing and databases related to that, the idea behind it was, okay, you guys host that huge database of information for people, and we tag back, fresh credit block ID to point and reference. That's my information. Never in a million years that I think we'd be working with or talking about a genome sequencing company being involved in. It's just, these things come out of every direction. On ways Klarna, another company I'm sure people have heard of.
Yeah.
came to us very interested in the social data because the policy around scraping social data is no.
Mm.
But they do it anyways. And when I say they,
is it no because Facebook doesn't give the authorization?
no, it's because it's federally not allowed. Like I mean, right now it's highly frowned upon, and there's upstream policy that is going to be making what they call screen scraping and scraping of people's data illegal, so that the consumers have more control over their information. But yeah, it's such a mess out there that we have to just provide consumers the tools to be able to control those situations, because we can't change the laws. We can over time, but what do we do now? Like, great that it's illegal to have a boat with a hole in it, but there's still a hole in the boat.
Yeah.
So can we plug the hole? Because illegal or not illegal, we're still going to sink.
Yeah.
And there's a lot of innovative ideas out there these days. I don't know, be quiet after this one. I just think it's so crazy to me that how many smart people are out there trying to solve problems that are less important than the simple ones, right? The simple ones, there's difference between logical and psychological problems. If it was logical, somebody probably would have already solved it by now. So what we should understand is that we're faced mostly with psychological issues. People not knowing or understanding how to engage with innovation. And that is not innovation. That's an invention. Innovation is adoption plus invention, meaning they know how to engage with it. If you made something that does something, but people do not adopt it, that's an invention.
Yeah.
So I threw out there. It's like, back to why these things are important. Like, you hear it all the time, solve a problem. And people think like this mantra is just solve a problem, No, actually solve a problem. Like, think about that.
Yeah.
Not just try to provide a solution to a very niche problem. Niche isn't bad, but these individuals that are involved some of you know, they're not here to solve little problems.
Yeah. These are bigger problems.
These are big problems, like way bigger than I ever thought of. Like, I got into this thing thinking like, okay, I'll make some good money, and now it's like, holy cow. Yeah, different life than I had planned, but one that I'm grateful for.
Yeah. So how do people find you? They want to learn more. And
Devin Shugaki, Google me.
Google
me. You'll find me.
Not Bing. No
Bing.
Yeah.
Well, Bing, whatever. I don't know if it'll pick it up. Oh yeah, I like that you pulled that up there. Yeah. So just first last name Devin Shugaki on most platforms.
Yeah.
Devon Shigaki. Check out Fresh Credit and the Fresh Credit organization, Fresh Credit Lab. We are taking interns. This will be our third batch of interns.
Oh, nice.
We've had some interns from the University of Illinois, University of Washington, DC, and what else? Yeah, looking for people just that want to help us build, and also work with some amazing executives and policymakers who are at the heartbeat of these industries, between the cross section between AI, data, and blockchain, because this is really, AI can't do anything without good data. Let's just be real about that. So that means blockchain is more important. It may be more boring because it's just a ledger, but is more important even than AI
to feed the AI.
Just like credit is more important
for AI
for innovation. Yeah, right. Because if you have an AI that's getting its data from bad sources,
right,
that's a problem. Now, back to the other point, though, remember, it's like, if it's correct, but not, from a good source, that doesn't...
Yeah, that doesn't help anybody.
It doesn't help anybody, and it doesn't matter to the provider. They have the correct data. They're going to make their decision. We need to find that balance where people can provide good data to providers without exposing themselves and the risk that comes with that. Because the whole reason my identity got stolen and led from that was an honest system, mostly honest, the SEC, FTC, just doing what they needed to do. And somebody then targets a person whose information is out there that is also known, and boom, this could have been anybody. Anybody. I just don't know how many people actually make it through that minefield of losing their credit and then rebuilding. I've never heard, and I'm not saying the only one, for sure I'm not the only one, but it is a shameful process that also, even if it's not your fault, you're ashamed of the position you're in
Mhm.
because it's your responsibility. And that is a hard one. The mental, a big part of our organization, I know I'm going on and on here. The important part of our organization is focusing on the mental relationship uh, that finances create, that we have with our finances. When you think about all of our relationships, the most important ones are romantic,
Mhm.
familial, and financial.
Yeah.
And yet there is very little information on the uh, physiological and mental outcomes that finances create.
Mhm.
So that's why we've brought on Harvard professors and fellows economists
Okay.
who, one of our team members put out a paper that got 1 million callers on a radio station in
Wow.
Poland. Okay, just on financial
What's the name of
well-being.
this paper?
I don't remember his name is paper, but you can look him up. Piotr Bielawski. I can spell this out if you want to pull it up there. But guy is amazing. Piotr, and then Bielawski. Bialowski. Bilowo.
Yeah.
L. Yeah, right. L. Yeah, right there. Okay.
Shine Harvard.
Yeah. If you click on the ResearchGate one down below, this is amazing. He was on one of our podcasts.
Yeah.
Insanely and smart. And so I asked him, because this has been driving me crazy. I asked him, like, why is there not more material on like financial well-being and health? And he goes, well, across all society, because I was like, God, what is going on? Why is this just a gap for everybody?
Yeah.
It's because in almost all societies, it doesn't matter who you are, where you are. It's taboo to talk about your financial status. Whether you're in the middle of a jungle or you're in the middle of a metropolis, it like doesn't matter. And so the idea to have a conversation about this is not even brought up. So you deal internally with these problems and these successes.
And then it begins to affect your health and whatnot if there's stress.
Yep. And if it's positive, then there's all the ripple effect of like, well, now people are looking to me to take care of them, do these things for them. And so not sharing good information also becomes a habit. This is like double whammy. So opening up the door for people to talk. How do we do that? By implementing an assistant in the actual application that can see their report, helps them understand their report, and they can ask that assistant, that AI, any question they want without feeling ashamed because they know that it's not a person on the other end being like, what the hell are you talking about? That's the change here, is having a conversation, starting that process is where we're at. Most people think that we're so far past and all the things that we've invented. We've done that on 6% capacity for the last few thousand known years. Okay, like what happens when we 24x? So just open up the dialogue to everybody else. I don't know. It's gonna be crazy though, man. Like what we're experiencing now. There was a study saying, I don't remember exactly the figures, but they were saying that every few years we will pretty much be doing a whole decade. So every year is going to be 5 years worth of progress, and then it just gets faster and faster and faster. But we should fix this thing at the beginning first.
Yep.
All right. What about you, man? What's the future for you?
Future for me?
Yeah.
It's more conversations like this.
Yeah.
But well, thanks for coming on the show.
Appreciate it, man.
Yeah, it was great to run into you.